I was just looking at some of the clean energy ETFs, and Valerie, they are down about 30% this year. Compare that to big oil and energy producers, which are leading the S&P, right? They're up about 45% on average. I guess the popular explanation for this strange nexus is this whole supply-demand equation and inflation, but what's your take?
Well, my take is that for some of the renewable energy stocks, they are traditionally categorized as growth stocks, right? And we know that there's been a bit of a sell-off or a significant sell-off in many of the growth stocks, not just in renewables and in clean energy, but in other sectors of the market as well. So I think some of this is related more to the factor exposure that you get by investing in renewables and renewable energy. But I think over the long term, those stocks should, in general, recover. In terms of oil prices, energy prices have definitely gone up, really, I think, as a function of the recovery in the economy and the surge in demand. So we know that there's a tight correlation between energy prices for stocks and the underlying price of oil, and that's what we've seen there. Whether that will persist, I think, is a different matter, because we know over the long term, the energy stocks have underperformed significantly.
The highlight of this week's economic calendar will be that jobs report on Friday, Valerie. Over the weekend, Republican Senator Pat Toomey telling the Financial Times he, of course, has been a leading critic of the Fed's ultra-easy monetary policy. He says the Fed risks being behind the curve. What's your take, and do you agree?
In terms of the Fed being behind the curve, meaning responding perhaps too late to inflationary pressures,
right.
I assume that's what you're
Exactly.
implying. I don't necessarily agree with that. I think that much of the inflationary pressure that we're seeing is likely to be transient. We really are confronting a challenging situation now with the reopening of the economy happening at a very uneven level. So we have a lot of supply chain bottlenecks. We have a lot of shifts in demand and a mismatch in demand and supply that I think over time will likely abate. Now, the one area that I think will persist in terms of inflation is wage inflation. That's a consistent level of feedback that I'm hearing from CEOs and CFOs of companies. It is taking more to get companies on board and back into the labor force. And quite frankly, there were probably companies who were over-earning, so to speak, who are going to have to make some adjustments to their compensation and benefits in order to attract employees.
I see here that GM is one of your top picks in your portfolio. Why is that?
GM is an interesting company in terms of how they are looking at the future of electronic vehicles and really leaning in heavily to that in terms of where they're investing capital and the way that they're thinking about developing automobiles for the future. So that's one. Secondly, they're also focused on safety, and they have a very strong competitive positioning in the SUV and crossover market, which is the most profitable market in the automotive industry. And so I think while remarkably, I think several years ago, people would have counted GM out. They seem to have really gotten back up off the mat, so to speak, particularly given their commitment to electronic vehicles.
Yeah, it's fascinating to see how GM is up 45% this year, actually outperforming Tesla. Do you think that outperformance continues?
Well, certainly we'll see. I think that there is room for multiple players in this secular trend within the global automotive industry. We've seen strong performance from Ford as well. I think that companies that are wise are investing heavily in this area. Tesla is more of a growth stock. So again, remember I mentioned that the growth stocks have suffered a bit more recently, whereas GM is traditionally has more value characteristics, so it's performing accordingly.
Within technology, where would you put your money?
Within technology, we have a wide range of exposure to a lot of the large technology companies, as well as software and services. One of our core holdings, as an example, is PayPal, because PayPal really enables small and medium-sized businesses to participate in the shift to electronic commerce. And that's actually worked out quite well for us. But that's just an example of many of the holdings we have in the technology sector.
Shepard Smith here. Thanks for watching CNBC on YouTube.